If you want to know what's happening to our rental markets, that's what Dr. Andrew Wilson and I are going to be discussing in today's Property Insider Chat, and it's not particularly good news for tenants. We're also going to be talking about the latest building approval figures and what's happening in auction markets, which gives us a good indication of how things are happening on the ground this weekend. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. Housing rentals skyrocketed over the last couple of years, but at the end of 2024, the rate of rental increases started to slow down, leading some commentators to predict that this was the end of rising rents because of affordability constraints. However, in a strong sign that Australia's rental crisis just refuses to subside, vacancy rates have remained low and rents are starting to rise. So to understand what's really happening with vacancy rates and rentals around Australia, I'm looking forward to speaking with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack the My Housing Market latest rental report. Hi, Andrew.
Yes, good day, Michael. I think, unfortunately for tenants, the news that rental markets were perhaps normalising has perhaps going to be short-lived because the latest February rental report from My Housing Market certainly shows a significant tightening over February. To some degree, we shouldn't be surprised at what happens over February because we're coming out of the holiday season, which of course is December and January. So we have a refocused tenant market, and hence we've seen a very sharp decline in vacancy rates, actually for both houses and units, and for all capital cities, Michael. So it really is, firstly, that seasonal trend that's affecting the February results. But I think we're a little bit premature to be calling the end of what's been a very tight period for rental markets over the past couple of years. And, it's not just the seasonal effect. We look at that, we say, okay, well, it is because, tenants are coming back into the market, beginning of the school season, beginning of the working year, and that means people are looking for accommodation, and that's why vacancy rates fall, because, the market's distracted over, as I said, December and January. But when we look at the actual vacancy rates, Michael, they're very sobering from the tenant's point of view, because vacancy rates are below 2% for houses everywhere except Canberra, and they're at 2%, and closer to or below 1% for most of the capital cities for houses, and a little bit higher for units, but still below 2% everywhere except Melbourne at 2.3%, which is still, notionally in favour of landlords and well down on where Melbourne was just a couple of months ago. So with these very low vacancy rates, it means fewer choices for tenants. That means there'll be more applications per unit, and that of course means upward pressure on rents. And if this trend continues, and I can't see any reason to suggest it wouldn't, I think we'll be starting to see another upward trend for rents for both houses and units, but particularly for houses. So I think what we have is a systemic problem here, Michael, in our rental markets. We're going to look shortly at the latest building approval data, and that's showing a little bit more positive results than we've seen for a while, but it's going to take a long time for that to translate into improved supply in our rental market. So I guess the spectre of higher rents is not something the government would celebrate in an election year. And just when they could say, oh, things are looking better on rents, it looks like maybe that was a little premature. So that might offset the gloss from the latest interest rate cut, but that remains to be seen. And also the Reserve Bank will be a little nervous about, a reversal in housing costs.
Well, let's look at your first chart, Andrew, which is showing what's happening to house rents. And if you look at the vacancy rates for those, they've dropped in every state.
Yes, every state, Michael. and only Canberra is at 2%. All the rest are above 2%, and Adelaide, Perth, Hobart, and Darwin are below 1%, with Brisbane at 1%. So these are sobering numbers, and they do reflect the shortage of rental properties, rental stock for houses, which, as I said before, is not good news for tenants. There'll be plenty of competition for available properties out there. Not a lot of movement for rents over the month. It takes some time for those sharply lower vacancy rates to translate into higher rents. So rents are either up marginally or down marginally or flat, with the exception of Darwin, which increased by 2.1%. But we know Darwin, smaller market, and it tends to provide volatile results. But Sydney's still number one for house rents, Michael, $800 a week, steady over the month. And Hobart is the most affordable at $564 a week there, and asking rents for houses and just down by 0.7% over the month. A little bit different for units, some more volatile results when we look at the monthly change in rents. Sydney was down 1.3%, Brisbane down 1.9%, but Melbourne up 1.7%, Adelaide up 3.2%, and Perth was steady. When we look at the annual growth in rents, Michael, we've switched back to houses, and we can see that Perth's the leader there, up by 7.7% over the past year, of the major capitals, and Brisbane up 4.8%. Melbourne house rents actually are down 0.8% over the year, so steady. But with those low vacancy rates, I expect those annual rents to start to rise again. And when we look at unit rents, Adelaide's the top performer over the past year, up by 10.9%. And all capital cities, Michael, have reported higher rents over the past year for units. So, as I said, I think these lower vacancy rates, if they are maintained, and there's no reason to suggest they wouldn't be, I think that they're going to translate into higher rents sooner rather than later. And maybe those changes the government made to its migration policy by reducing the number of international students coming in may have been a short-term effect on the rental market. And now we're back to where we were basically 12 months ago, Michael.
Well, that's partly because despite our rising population, we haven't been building enough accommodation. And I know my housing market keeps a careful eye on home building approvals. What do the latest figures show?
Well, some good news, Michael, if we could say that at the margin. We've actually seen home building approvals rise again over January. This is the first month of the year, of course. But home building approvals were up 5.9%, so that's a healthy rise over January, and that followed a 3.8% December rise. So back-to-back increases in home building approvals, monthly home building approvals. As usual, units led the charge. Of course, that's a volatile set, because we can get larger developments coming through on a monthly basis, and that means it's a bit of a roller coaster ride. For unit approvals, houses were up 1.1%, units up 12.7%. New South Wales was the top performer again, total homes up by 39.6%. But again, that was driven by a real surge in unit approvals in Sydney. Now, what we're seeing, I guess we could herald as some improvement, is we're now starting to see the underlying trend for building approvals on the rise, Michael. It's certainly still below where it has been historically on average, but there's clearly a revival in the underlying trend, the annual trend in building approvals. So that's some good news. But when we look at where it's coming from, it's actually being generated from units, Michael. We've actually had a really big couple of months for unit approvals in our capital cities, and it's those unit approvals that are revitalising the home building approval trend. In fact, houses have flattened out a little bit over the past 6 months. They were the leading performer over units over most of last year, but they've become a bit more subdued, Michael. But units are certainly surging at the moment, and I think it's interesting to see when we look at the year so far. In terms, and of course the year so far is only January, comparing it to January last year, there's a massive rise in the building approval numbers this year so far, 1 month, compared to the same period last year. And I think that's quite a good indicator, not just that overall numbers are higher, but they're significantly higher and across the board. Every capital city, with the exception of Perth, has recorded a very strong increase in unit approvals this January compared to last January. And house approvals, with house approvals up in Sydney and Melbourne, and Adelaide and Perth, but not at the same levels as unit approvals. So units are leading the charge back, Michael. But of course, as we reiterate, it's units. If we are getting now a surge in unit development, a consistent surge. And as I said, this can be volatile, but nonetheless, we're tracking higher than we were a year ago. But the question is how long it takes for these units to actually become, live-in homes, and that could take a couple of years at least. So even though the building approval trend is positive, it's going to take some while for it to translate into completion trends. That's why houses are probably more important in the sense of resupplying Australia's housing markets, Michael, because they can take less than a year from an approval to a completion. But anyway, look, it's a good sign. I think perhaps it shows us that, local governments and state governments are becoming a lot more proactive in terms of planning approvals, particularly for units. And we'll see how this, translates over the next couple of months. It might be just a volatile period from units, which we're used to. But I think anecdotally it does suggest that there's more impetus from governments to provide unit planning approvals, and they're translating now into, over the past year, a rise in the underlying trend for development. Good news, but maybe not as good news as it could be.
Well, we've got to see what happens in the next stages. So it's great that developers are now getting the comfort, the courage to go to the next level. But now they've got to, in general, sell them, pre-sale, make a certain number of pre-sales to get finance approvals. They're going to have to be at much, much higher prices than the last wave of developments.
That's right.
And definitely at much higher prices than established properties. All that means, of course, is that that's going to underpin the value of current established apartments, and the property market's going to keep rising, Andrew.
Yeah, and look, the other problem, of course, is building costs, Michael. And the ABS has recently been reporting that house building costs have been easing, but our data has shown over recent months that house building costs have actually started to pick up again. Now, we're going to release our latest house building cost index. We'll look at that next week, Michael, just to see how that's going. But that's obviously a significant constraint to getting these building approvals to be completions or even commencements, is the cost of building. And if that's rising, that makes it less likely that all these approvals will become commencements.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, each week we discuss the auction results because they give us a good indication of what's happening on the ground, how buyers and sellers are feeling. Clearly, Melbourne had a disrupted weekend with a Labor Day weekend, but how did the auctions pan out?
Well, they're continuing to be a bit of a same old, Michael, if we can say that. Very similar results this weekend compared to the previous weekend. The big difference was, and it wasn't just Melbourne with its holiday distraction, as you said, the Labor Day long weekend, We had a big fall in the number of auctions coming through. So despite the fall in the number of auctions, although you would expect that to provide more competition between buyers because of fewer properties, clearance rates were just about the same on a week-to-week basis, Michael. Sydney had a significant fewer numbers of auctions, just 870 versus 1,001 the week before. But the clearance rate was very similar. The Sydney market has perhaps surprised some this year, Michael, because after showing perhaps a little bit of weakness towards the end of last year, no surprise because it's been a strong couple of years in Sydney. So it was, I guess, having a bit of a breather, affordability constraints and seasonal effects pushing it down. But it's bounced back quite strongly this year, Michael, and has been tracking above 70% with its clearance rates for the past 6 weeks. And we're actually tracking some prices growth, which is no surprise as a result of that. So we're actually looking early days for March to see a real bounce back in the Sydney market in prices. And that's certainly not a surprise given the robust clearance rates that Sydney's been recording. Melbourne, similarly, it's the same result from the previous week, in those high 60s now. We were used to seeing Melbourne in the low to mid 60s for most of last year. It's also started the year off in a positive sense, marginally better than where it finished last year. And Brisbane, as usual, around that 40% mark, different culture there, as we say every weekend. Adelaide down a little bit from the week before, and Canberra up a little bit. So, Michael, it's a bit of a same old in terms of our auction market results so far this year. And I think that's positive. And maybe, Michael, we're seeing some effects coming through of that interest rate cut as well, just keeping the market just bubbling over, I guess we could say, at what would still be considered overall good results generally for sellers, and no doubt that putting upward pressure on prices in that Sydney market going forward.
Well, moving forward over the next couple of months, there's going to be the distraction of the federal election, which now seems like it's been pushed back because of the unfortunate, terrible conditions up in Brisbane. Anthony Albanese had to put off the decision about when to do an election. There's also going to be other distractions as the year moves on now with school holidays and Easter, but we'll be tracking the auction results each week, and you do each week in My Housing Market and on your LinkedIn, and I publish them every Sunday. So look forward to catching up with you again next week, Andrew.
Yeah, Michael, and those house building costs will be interesting to just to see if our data is reinforcing a pickup again in house building costs, which isn't good news with higher rents potentially for home building costs with the CPI. And of course, that'll work its way into the discussions in the Reserve Bank for interest rates.
Yes, it will. See you next week.
Thank you, Mike.